In this video, guys, we are going to look at ways to check and align with current market conditions. Stay tuned. Hey traders, warm welcome to you. All right, so market conditions, being in line with market conditions is super important. Why? Well, I've done a video specifically on that. If it hasn't come up already, then make sure you're subscribed. If you want to be notified, you know where the notification bell is. You can look at the video title. If it's something you want to watch, great. If it's not, wait for the next one. But there's a video where I talked specifically why it's super important to be aligned with current market conditions. Now, it's probably common sense to many people out there. If you're in an uptrend, you want to be buying stuff that's in the uptrend. If it's an uptrending market, for example, in the stock market, you want to be buying strong stocks. If it's a bear market, you want to be shorting weak stocks if it's available to short. In range-bound conditions on a currency pair, you probably don't want to be looking for breakouts. You want to be looking to fade breakouts, mean reversion type environment. Makes perfect sense, right? But actually, how do we measure and align with the current market conditions? So anyways, before I continue, do check out our channel sponsors. A link to them in the description below. Go and click the link, check them out and see if they're right for you. So how do we align? If you think about three different phases here, roughly speaking, admittedly we're on whiteboard here, but you get the idea. We've all seen uptrends, we've all seen volatile conditions. You've definitely seen volatile conditions over the coronavirus, hitting those circuit breakers like they were not there. Range bound conditions, very quiet, kind of tagging highs, tagging lows. We've all seen these as well. So you've probably seen these different types of environment, but very often mistakes we make as traders, we try to force different trades onto the wrong environment. So when I'm in a range bound environment, like, oh, we're buying a breakout, we're buying a breakout, buying a breakout, want to hold on to this, want to hold on to the winners, want to look for multiple day moves. Just get stopped out, stopped out, stopped out. Same with the uptrend. We're trying to fade highs. We think it's an invert. We think it's a head and shoulders. We think it's a reversal, and the strength is going to continue on. Volatility. We're too narrow with our stops. We're getting pinged out. So many mistakes we can make. Strategies that work super well in this are going to get smashed in this and smashed in this. Strategies that get smashed in this work well in this. You get the idea, guys. There's very rarely that strategies work across all types of market, which is why it's so important to gauge and check and align with the current market conditions. All right, so what sort of indicators can we use to judge the type of conditions we're in? So, indicators can help you, especially if you're using them as kind of a binary filter. If this, then that. So in other words, if it's this, then we're in this condition. And there's a good place to start. So something like an ADX, if you're over 30, you can use different varies for this. You're in a trending type environment. And that's used traditionally to define a trend. Not my super favorite, but it's okay and it's super popular. A moving average. So moving average might be how many times are you getting crossovers between the, if you're using really short-term moving average like a 5, you're always going to get a crossover with it, except for some aggressive trends. And if you're using something like a 20 and a 50 or a 10 and a 20, just about, you get the idea. The higher up the moving average, the slower the moving average is, the less likely they are to cross over. And if you're kind of using, say, a 20 and a 50, they're probably not going to be crossing over at all if you're in an uptrend. Whereas if you look in a range bound environment, they're going to be crossing regularly. So how many times they cross, also the distances between moving averages is also another good one. If you're getting big moves away from moving averages, how far price is away from the 50 period, that kind of stuff. So just common sense stuff to think about this kind of thing. Another one, unusual one you might not consider, is an oscillator like RSI, like CCI, like stochastics, those kind of things. If you're getting persistently overbought or oversold conditions, or the other way around is, hey, we very rarely go into oversold, we kind of occasionally get into oversold, that's probably indication that you're in a good, solid trending environment. Now, don't forget how these are calculated, guys. You've got 20 period stochastics. It's only looking at the last 20 days. So it could be high. It could be the low of the 20 days, and it might well push it into oversold. So you've got to be mindful of how some of these indicators are calculated, but it gives you a good idea. If you're in a range-bound environment, you're going to go overbought, oversold, overbought, oversold, overbought, oversold. It's going to be ping-ponging back and forth like a sine wave. Whereas if you're in an uptrend, you're probably going to get that persistency of overbought, overbought, little dip down, back up to overbought, and vice versa for a downtrend. Volatile, you're going to get the same kind of thing, which is why they're not so useful. So this is why I look at other things. Rate of change, great one to use in volatile conditions because it comes an absolute number sometimes, depends on how you set it up. So you say, wow, look how much we're moving in a 3-day rate of change. How much we're moving in 3 days. We're moving, wow, we're moving like 600 pips or whatever it is in 3 days. Hey, this is way higher conditions than we've had before. Something like the VIX, obviously if you're trading US equities, you've got access to VIX. Other products do have access to a volatility component. I know there's one for crude oil, is it OVX? Someone correct me if I'm wrong, there's a crude oil volatility if you trade crude oil, and other instruments as well do have a volatility index, if you like. It's not tradable in some circumstances, but it gives you an idea of how volatile that is. And also if you look at some of the options, you can look at some of the options, individual equity options, and you can also see as well how volatile they are. So rate of change, volatility component as well, some kind of spiking. Something like a Bollinger band width is great, guys, because the standard deviation, and that starts spreading wide when we get volatility, because it's kind of trying to encompass all of price. And so you see this width in the volatility, expansion, bang, these Bollinger bands or Keltner channels are going to be wider and wider. So that's a good kind of indicator as well. When you're in range bound conditions, again, Bollinger band width, Keltner channel width, handy. RSI stochastic, as I said, that's going to be pinging up and down, up and down, up and down. And then of course ADX is going to be a low number if you're range bound environment. But what trumps all of these guys is to use your eyeball, using hopefully two eyeballs, but using your eyes. So looking at it and going, you know what, it just looks like you're in an uptrend. Let's categorize that as a trending market. This looks range bound. These can help, and actually there can be a primary filter. Let's say you're filtering through, you know, a universe of currency pairs or a universe of stocks. You might just use a filtering criteria on whatever filtering platform you're using or whatever process you're using that says, hey, you know, ADX below 30 or below 20, whatever number, Bollinger band width X, distance from moving average X. You get the idea, and that's at least going to start the ball rolling. If you're saying, okay, I want an X% away from my 50 period moving average, you know it's going to be an uptrend. If you say, okay, I want less than X% away from the 50 period moving average, you're probably going to do a range bound market. You might pick up some volatile stocks, but you get the idea. And then, you know, there's nothing better than scanning through stuff. Don't spend ages doing things, but scanning through and categorizing them by eyeball. Hey, that looks like a nice trending environment. Put it in my trending stocks list. Hey, that's a really range bound currency pair at the moment. Look how many fake breakouts it's doing. I've got a beautiful mean reversion strategy that's working for that. Stick it, or could work well for that. Stick it in my mean reversion list. So there's nothing that's better than actually looking, but these kind of indicators help guide you to check and align with current market condition. Take care, guys. Keep your risk managed, and I'll see you in the next video. Thanks, by the way, for all your subscriptions, likes, comments, shares, and all that kind of stuff. Bye-bye for now.